I'm speaking with Phil Deshay, CEO of Global Financial Training Program, and we're going to be speaking about alternative ways to finance a business. How are you, Phil?
Good morning, John. How are you today?
I'm great. Phil, you've been in the lending business for a long time, I think something like 3 or 4 decades. Is that right?
Well, about just turned 36 years this week, actually. So I think that's a long time. It seems like it's been about 10 minutes. So, but I think we've learned a little about the finance industry over these years. I'm talking to you from my offices in downtown Manhattan. We're located just about 3 blocks away from Wall Street and about 4 blocks away from the World Trade Center site. And today we're going to be talking about probably one of the most misunderstood types of financing out there, in SBA loans. Most people, when they hear the word SBA, they think of it as a loan that's going to take a year and a half to get, a lot of paperwork and all that type of stuff, and just impossible to get. They also think about SBA loans as only one type of loan, when there are actually several types of SBA loans. And if these loans are understood properly, then getting them are actually quite easy. So we're going to be talking about the different types of SBA loans today to get rid of all the myths about how people look at them, and to make it sort of them to understand how easy it is to access these loans and what they all really mean. We're going to start off by understanding that the SBA stands for the Small Business Administration, and the SBA does not actually make any loans. What they do is they have preferred lenders throughout the United States. Most of the major banks are preferred lenders, although most of the banks don't really do SBA loans. They're really not trained on them. And then there are private lenders who are also preferred SBA lenders. They have that status. And lenders are the ones that actually make the loans, but they must abide by the guidelines of the SBA. And what the SBA does is guarantees 75% of the loans, as long as they meet all of those guidelines. Now, there's basically 2 different programs in SBA lending. There's the 7(a) program, which is probably the most popular of the 2 programs. We'll get into depth on that, where they can make loans of up to $5 million. And then there's the 504 loan program, which goes up to about $14 million. And we'll talk about what that is all about as well. Now, there's more than one type of SBA loans, and I'm going to talk today about the most popular loans and the most misunderstood loans out there, and how we look at them, and how easily it is to get them approved, and how quickly we can move them through the system. Generally, we're a cooperative client. We can generally get an approval in anywhere from 4 to 6 weeks, I would say, even sooner than that in some cases. The first type of loan that I'm going to be talking about is commercial real estate. Now, the SBA loan cannot be used for investment real estate. So if you wanted to buy an apartment house, or you wanted to buy a strip mall, or something for investment, that can't be used for that. SBA is strictly for to take a person's business and help them grow their business. Now, let's take a look at the normal commercial real estate market. Let's say you're a business owner. Now, let's say, for instance, you wanted to buy a building to house your business. Well, if you went into a normal bank, what's going to happen is they're going to want probably about 25% down. Well, let's look at an actual transaction that we've recently done. We had a dry cleaner, and his rent was getting exorbitant, and he couldn't exist anymore. He wanted to buy a building, and the building was only about $700,000. Went to his local bank. They wanted him to put down $200,000. And normally the way a bank would work is they will give you a 5-year loan, or maybe a 7-year loan, with a 25-year amortization, which most of you out there don't understand what that means. It means the payment is as if it's a 25-year payment. But after 5 years, the loan has to be renewed, and there's a huge balloon payment because the payments were very, very low to go. So if the bank doesn't renew that loan, well, you have some real issues there because you're scampering to get it on. And then the past economic turndown since 2008, as tens and tens of thousands of business owners have lost their property because the banks didn't want to renew them. Now, in an SBA loan, it's quite different. You can purchase a property with only 10% down, okay? And they'll give you a full payout over 25 years, not a 5-year or 7-year type of loan, a full 25-year payout, only 10% down. So in the case of this dry cleaner, they only had to put down $70,000. Now, they had another need, though. In order to get into this building, they need a whole new electrical system, plumbing system, new equipment, and new signage outside. They needed that other $300,000. The bank would not give them that money because that was unsecured. We were able to get them that $300,000 with no money down and combine the whole loan with $1 million over a 25-year payout. So they were able to get into the building with the $300,000, only $70,000 down. And needless to say, that particular shopkeeper was thrilled to death doing it. And most business owners don't know about it, so we like to put out educational pieces like this so people understand that they can get this type of a loan out there, and most people do not know it's available. Another type of SBA loan would be, let's say you had two partners, and one partner wanted to buy out another partner. Well, we can get an SBA loan for that too, and that could go up to $5 million with no money down. All the SBA looks for is that the business can support the new debt for the partner being bought out. And usually it's pretty easy to happen because the partner being bought out won't have a salary drawn anymore, no expenses on them, their insurance, their payroll, maybe they have a car on there. So if we can show that they have the cash flow to support the debt, we can generally get that done in about 2 weeks as an approval with no money down. And most people don't understand that. Another popular SBA loan would be a business acquisition. Let's say you're in a business and you want to buy another company. All you need there is the experience in the business you want to buy. Like right now, we're in the middle of getting an insurance company. Wanting to buy another insurance company. So we have plenty of experience there. The proper down payment, which is usually about 25%. But here, in this case, the insurance company they're buying is taking back a note, 15%. It's only 10% cash down, and there's plenty of cash flow to service the debt. So that loan will probably get approved in about 3 or 4 weeks. It's a quick and easy one. So I can go on and on in the different types of programs that we can get approved. But if you have a cooperative client, you can generally get these loans approved rather quickly, and you can close them rather quickly as well. And now I mentioned another program, the 504 program. That program is primarily strictly for real estate, and we do a lot of hotels in that program. There we have the preferred lender, and then we have a third lender called a CDC, and they both share 90% of the loan, and the client puts up 10% of the money. So that's a really, really, really great loan. We finance many, many, many hotels with that loan. So to go over the SBA loan again, it's a phenomenal, phenomenal loan. It's probably the most misunderstood loan out there. A lot of times when I tell clients, well, we're going to do it by SBA, they shudder. They say, Phil, I don't want to wait a year for this loan. Kids, there's another way to go. Don't shudder. It's a loan that we can get done rather quickly. It's really a phenomenal, phenomenal loan. It's probably the best one around. The rates are great. Okay, they're in the 4s and the 5%. They're long-term loans, and you could prepay them whenever you want, but I could never imagine anybody wanting to prepay an SBA loan. So that's my brief information on SBA loans. I hope that's been helpful for everybody out there to learn about it. And John, do you have any final questions about SBA loans?
I think it's great the way you just described it. It certainly clears up a myth that I had, which is that these loans take an awful long time to complete. And I think it's appropriate for me maybe to mention at this point that one of the things that you do, I know you've had a Global Financial, has been loaning companies money for 35 years or more, but you also have an arm of your multiple companies that trains people how to become the middlemen in these transactions so that they can arrange it. They can reach out to local businesses or even non-local businesses and accommodate these loans. You have a training program that does that. I'm kind of curious, without getting too deep into it, how people get involved with that.
Well, about 16 years ago, we formed the Global Financial Training Program, and it's been very, very, very successful, where we teach people how to get into the finance business, where we set them up with lenders, we teach them marketing, we teach them how to understand all these different types of loans. That's sort of a turnkey where they can get into the business rather rapidly. The commercial finance business is not a very competitive business out there. There's so much business going. I'm sure if any one of you ever got in your car and took a drive for an hour, you're going to see a lot of banks. And they're across streets from each other, next door to each other. Banks right now are under a lot of federal guidelines as who they can lend, who they can't lend to, and they're turning down many, I'd say about 80 to 90% of all loan applications. So we put people through this program, and we set up with lenders again, and we have a very, very high level of success in the program.
Well, we'll be speaking in this series about other lending programs that you have. I read an interesting statistic the other day. It said there were 30,000 loan requests processed every day in America.
I would probably say the number's even higher than that. I would say it's much, much higher than that. When you think about the size of this country, I tried to Google about 2 weeks ago how many bank branches there are in this country. I just couldn't get a count. I got to figure there's got to be a couple 100,000 bank branches. And we're located here in New York City. You can't walk 5 blocks without passing 20 banks. But I think there's probably more than that. But even if it's only 30,000 a day, just think about that on an annual basis. People go through our program. You do 2 or 3 a month. You're making a lot.
That shoehorns us nicely into the next subject, which will be the state of the art of the banking industry in the United States. I wonder if you could tell us a little bit about what exactly is the state of the banking industry in the United States and how that affects the small businessman.
Well, I'll tell you what's happened. When this whole financial crisis began back in 2007, 2008, the economy was booming, the stock market was going straight up, real estate was going through the roof, people were buying property one day making 20%, 30% in a month or two. Everything was going straight up, which was, I say, unhealthy to begin with. But that's what was happening. Everybody was happy. Everyone was making money. But what happened was Wall Street started funding subprime mortgages, and they were giving out money to anybody who didn't really deserve the money. So they were putting out billions and billions of dollars every week to people. So real estate got really, really inflated. They were lending money to people who really could never afford to pay back the money. And then we had that big explosion, or maybe I should call it implosion, of the entire real estate industry, where everything went crazy. Property started falling like crazy, and there were just all kinds of foreclosures going on. Now, the business lending industry, though, on the other side, was fine. We didn't have any problems. When business owners borrowed money, the lenders understood how to calculate business loans. And, in my company, Global, we do A, B, C, and D credits. We price them properly of where they're going. We know what their cash flow is. We know if they have the ability to repay or not repay. We do our due diligence, and we're fine. Now, what happened is the government, though, overreacted. Where the real problem in the industry was really the mortgage loans and not the business loans at all. The business loan industry was just fine. It had no problem whatsoever. But they overreacted. Now, the federal government allows the banks to lend out approximately 80 to 90% of the money that they have on deposit. At the same time, the FDIC is insuring our deposits, and they lay down the guidelines as to who the banks can lend to and who the banks cannot lend to. Well, they started over-regulating like that. This was maybe the spillover will get into the business lending market. Business owners know what they're doing. It wasn't like, going out and consumers and buying homes and homes and homes and homes. At the time, I remember speaking to one of my colleagues who was in the residential mortgage business, and he told me, he says, Phil, I can't believe today. I just gave a loan for $500,000 to a U.S. postal worker who just started out working. He's only making about $38,000 a year. And he can't even afford to pay the payment. What's going to happen to this guy? And he got in something called negative amortization. Not to complicate things, that means you're at half the normal payment. So he was doomed for failure to begin with. But in business lending, we never had those problems. But they tightened up like crazy, and the banks' hands were tied, where they're turning down, I'd say 80 to 90% of the business loan applications for small business. When I say small business, I'm talking about business loans under $15 million in volume and down. Okay, and these are the ones who really need the money. These are the ones who are suffering. Now, the banks are still lending. And they're lending maximum capacity. They're lending to the Fortune 500s, Fortune 1000s, where there's literally no risk. It's a little lower return, but they're getting a maximum lending power. So the smaller business owner right now is the one who's really been suffering. And that's where companies like my company, companies like myself, come in, where we can calculate risk. Our lenders are not bank lenders. They're institutional lenders, and institutional lenders do not take in deposits. So if you don't take in a deposit, you're not under the government guidelines. And they know how to assess risk properly. And they're going to set the rates based upon the risk. See, the way a funding source works and the way they look at things is they're going to set up, they calculate through very, very sophisticated computer software how much bad debt they're going to take on a particular portfolio. Then they set up a loss reserve account. So each funding they take, they set up a little loss reserve. So they know they're going to take bad debt, but when they take it, they're going to have that money set aside for the loss reserve. Just simplify it. It's a little more complicated than that, but I'm oversimplifying it, but that's really what it is at the end of the day. So that they're able to put out money in all these different credit categories, and they assess the probable risk. They set the rate to match the risk. Now, a lot of people say, well, Phil, how could people afford these high interest rates if they're in a C or D category? Because sometimes our rates could be 18, 20%, 22% sometimes. Well, when a business owner borrows money, unlike a consumer, they're borrowing money because they intend to make money. Now, it doesn't always work out, but in most cases, it does. And let me give you an example of what I'm talking about. Let's say a business owner was in the construction business, or let's say they needed to buy a dump truck for $100,000. And with that dump truck, they were going to earn an extra $20,000 a month. And the truck cost $100,000, and they went to the local bank, and the bank said to them, "Well, we can't really approve you because you have to be profitable, and you don't meet the guidelines." And then they came to us because we get a lot of recommendations from banks all the time, and we said, "Yeah, we can approve it, but your payment's not going to be $2,000 like the bank would charge you. It might be $2,200, $2,300." Well, that business owner has his eye on that $20,000. So if they're going to pay an extra $200, $300, $400, even $500 a month, would it really, really matter? The business we're in is the availability of capital business, not so much the interest rate business. It's all about one thing. How much am I going to make And how much is it going to cost me? If I could make $10 and my payment is $2, well, it really doesn't really matter what that's all going to be about, because we don't make people's credits. And I'm sure nobody ever wakes up in the morning and decides to hurt their credit. It is what it is. Most people in this economy have gotten hurt in business-wise. So we're here to help provide those funds so they get back on their feet and build themselves back up into where they were prior to some of these bad times. So we can assess credits. We can make money available to these different businesses and help them grow and get back to where they were before. So that's how our whole industry is all about. And that's really where we really shine. The business. Some people say, well, how could you charge people higher rates, 4 or 5%? Well, we're taking a bigger risk. If they can make money with our money, great. I'm the first one to tell a client, if you take our money and I see what you're going to make, I'm the first one to say you're making a mistake. Okay, don't do it. Don't be desperate. And if I feel that you're not able to pay me back at the end of the day, well, then I'm going to pass on that loan as well. So I think we play a very important part in the industry. I think we're an alternative to made funding at the banks, where the banks are turning people down, and we're helping people grow and grow their businesses and get back to where they were before.
To summarize, what you're saying is, after the 2008 financial problem, banks were overextended. They became legislated far more closely than they were before, and even though they're lending at capacity, that there are alternative financing sources that are available to those 50, 60, 70% of businesses out there that cannot get a loan from a bank.
Absolutely, and then, you know, the reason I want to do this series is most people, or business owners I should say, because we strictly do business, we don't do consumer loans at all, don't understand what's available to them, okay? Don't understand the alternatives to the regular bank lending process. And I want to educate them on what is available. You see, we never try and force people to take out loans. In fact, nothing can be further from the truth. Our job is to put the money on the table and present it to the business owner to see if that's going to work for them. If it's going to work for them, fine. If it's not going to work for them, fine too. But I think the business community, we try to educate them so that they do have choices. I met with a business owner last month, and he thought he had he was ready to call it quits. He's really thrusting the towel. Nobody is here to help me. And I guess I'm at the end of the line. We had a conversation. He says, you're not at the end of the line. You have choices. And here are your choices of what you can do. And I believe that business owner now, we helped him fund his business. I think we got him back on the road to recovery. I think he's really going to make it now. And he's really, really excited. He never knew these things were available. And I think that's important, educating the public and the business owners.
Thank you, Bill. I look forward to our next conversation.